Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So listen, day like this happens, it's hard to see it coming. No one knows when you start at 9:30 what could happen, where things can go. All you could do is have some kind of plan, and that's what I try and do with my note, with my charts. I try and map out levels. I try and talk about if this happens, then do that. If that happens, then do this. What could change things. And basically last week we had a big rally into resistance yesterday. I thought it wasn't the end of the world, considering that, hey, we weren't on our highs of the day with power, considering we went, such a far distance going into the weekend of the G20. But we had a doji off the highs. I was like, all right, let's see how we handle 27.73, which is yesterday's low, which was in front of the gap in the S&P cash. If we held it, all right, methodical, tight, maybe we go sideways, digest, and then next time we get above 2,800, it's a buy. Instead, we hovered there, broke 27.73, broke the 200-day. At the same time, everyone was all worried about the flattening yield curve. Apple broke the reactionary low of 180.50. The small caps were weak. Goldman Sachs was at October lows. You put that all together and went down 800 points. So even if you tried to be cautious and not buy too quick, and I tried buying like 27.50 for a trade and it hurt. And I also tried the IWM in a few spots and it hurt. So I was cautious and trying to be careful, and I still didn't have a great day. But I'm actually in a good mood because I followed my rules. I came in long Apple, which I would do that at any given time. Apple closed strong. While the market closed halfway in between, it was still kind of in an area where I thought it had room. And then, Cruise came out with a lowered guidance, and it just opened down $4. And I said, okay, I'm going to give it to this level, try and, trade around it, salvage it. I bought it a few times, this and that, and then it broke 180.50 and went as low as 176. If I bought it every 50 cents down, I could have got steamrolled. Same way, whether it was the spiders or the small caps or whatever, or even some of the names that were up. Made some decent money, with the red to green trades that we tried to target in Tesla, in Netflix, in Facebook. But if you went back to them and said, oh, well, Netflix was up $3, let me buy it down $4, it went down 12. Lots of ways to lose money in this market, lots of ways to make money, net money, and be careful if you follow your rules and you do a level versus a level and you understand when things change. Let's get right to the chart of the S&P cash. So this is what I'm talking about. This is 27.73. When this broke, you had to say, hey, this little potential setup where it goes sideways here, kind of like what it did right here. Remember this? You had to move off the lows, doji, held above it and went. Here, you had a bigger distance traveled. Instead, it held above it. And some guys might have said, hey, I'm getting short. Resistance here. It trades below this doji, which sometimes means momentum is slow. I'm going to get short. And if you got short, you made a heck of a lot of money. I personally wasn't really thinking short, so I didn't buy there. I was actually short overnight. Actually, I was short overnight. And I covered when we got into the gap and filled a portion of it because I figured, hey, I want to try and be long the 200-day. We just did all this work, up to the higher end of the range. Yes, we can come in, hold the top third, and there's a 200-day right there. We could hold that, and then I could buy the dip here. I didn't buy yesterday at 2,800. Now I could buy here around 27.55 or whatever that was, 55-ish, 45 handles off, and instead it just sliced below, and I traded around it and survived, and now here we are, this big engulfing bar. And what do we know now? What do we know now? Here is the kind of double bottom. Here we are now not in the upper end of the range. We closed near the lows. Nothing's really acting special. We still are in a broken trend. Now this new range could be one big channel that at some point breaks to the downside, but doesn't happen until it happens. So if you're short overnight, okay, big down day, everyone might say, hey, there was a lack of liquidity, the funeral's tomorrow, so we could open up and, but if that's your trade, saying, hey, you know what, this day just engulfed the rest of it, the good book says, be a little short. What would help support that? IWM, look at that. Couldn't even make it up to the moving averages. And then, I was, just so you know my language, guys, one thing I have to learn with my, with a note and this and that is I do some webinars just to discuss like red dogisms. When I say I'm buying this versus this level, that means that's my stop. If I say it shouldn't break this for it to stay the current composure, if it breaks it, that means the trade changes from like methodical and tight to maybe going higher and digesting well to loose and wide, take some care, be on your toes. So when small caps broke 152, that kind of changed the trade. If it hung out in here, the upper end of this range, hey, maybe the next trade could have been to the upside. Instead it broke this and then I actually bought there, and I said, hey, you know what? I'm going to give it a little bit more room. I gave it more room. I bought down to 150.44, and then, I traded around it, and then I didn't, thank goodness, have to sit for the extra $2.50. But now, now if you want to talk macro, okay, because some things are happening on the macro sense, this is a very big level, in the IWM in the macro sense, right here. Will this break? That's a very big macro. This could be deemed a huge head and shoulders pattern with that being the neckline, okay? Maybe, and that's the case, and it breaks that, there's a lot of downside coming up, and that means the market's in a heck of a lot of trouble. I don't know if it's going to happen, but it could happen. Look at Goldman Sachs. Goldman Sachs, broke a big macro level, and it's been for sale ever since. Where was that macro level for Goldman Sachs? We talked about the head and shoulders pattern here. Talked about when it broke this spot, and now look where it is. At new monthly lows, way before a lot of other things. When Goldman Sachs, supposed to be the smartest guys out there and best in the world, are below all the moving averages and not finding a friend and making new reactionary lows, people are going to notice. And I said, if Goldman Sachs breaks, in my note, I'm like, if Goldman Sachs breaks 190 or 188, that's not going to be good for sentiment. So yeah, that's how you connect the dots there. And that was this low right here. Okay, now we're closing the lows. So if you're short this because they're closing the lows and let us down, that's probably the right thing to do. I'm not short that. And if you said, hey, JP Morgan, how could it, be all by itself, all up there, then maybe you made money short, or at least you got out of the way when all the moving averages broke. It opened below the doji actually, okay, which was pretty much big resistance, kind of like the S&P. And now, this has a macro level right here. In order for the market to really get hurt, it's going to have to break this. In order to get to there, it's going to have to break that. So these are levels you need to watch. JP Morgan, a big level to watch is 106.06, and then right here. Okay, Goldman Sachs is already well below all of those. So I'm just, there's short-term and, and intermediate things to think about, then there's macro. Just because obviously when we trade short-term, we want to know which way the market is leaning towards. For 9 years, it's been leaning up. Now it's like wibble-wobbling where it feels like, 2019 is going to be tough to the downside, so you want to be prepared that anything could happen. So that's why you need to know that some things could break big levels, and what does that mean? Most of high beta tech is broken, and they had a nice bounce since the 1120 lows, but today, now that active sequence kind of changed. We talk about the active sequence, meaning you have a move off the lows, you see commitment to it, you try and trail it and stay with it and play it in a direction, and then once that changes, you get out of the way because you don't know what's next. So with that being said, first of all, let me just go over Apple. Apple too, remember this, broke the big support on a gap down, couldn't fill it, and it's been pretty much trending down since. This is a big macro level in Apple, never really reached it. Here was a decent level, okay, that it wound up holding, if you remember. But then more close up, it did close well. It closed on the dead highs yesterday. So for me, I can't be so upset at myself for taking it long. I figured, hey, maybe it's got room to here. It's not that cute. Maybe it even goes to the 200-day. The S&P is above the 200-day. So I said, I'm going to be long. Today it got down. I was like, oh. I'm not going to be perfect and just sell it if it breaks 181.21. I'm going to give it to like 180. Made a quick move to 180.55. Hovered, and then I got stopped out. Could have been a lot worse, though. You look at the 5-minute chart, to see why. Well, here was the, this was right here. This was your gap down. It came off of it. It tried to do a red dog reversal. It tried to reclaim that 181.21, wherever that was, right around here. And then all of a sudden, it rolled down, and this was my, stop. I actually sold it a little bit before it. I just felt it coming. I sold it like 180, like right here, like 181-ish or 180.70-ish. And granted, maybe I could have flipped and got short if I was a friggin' Jedi, but I didn't. Could have made a lot of money back that way. Instead, I just get out of the way, and I didn't say, I'm buying it. Oh, I got to get out of it. Anyway, I just got out of the way. Tried to salvage it. There was nothing to salvage. They didn't give us much. They gave us, 181 back to 182-ish. So $1 to figure out if you could, buy some more and trade around it before getting stopped out. It is what it is. It's, it happens. So anyway, now, all I have left over is I sold the calls. Thank goodness. I have the 165 puts, and I'm hoping, actually, I guess I would want the stock down there that I collect that premium. Then you had the strongest stock out there. Okay, and what did it do? If you were waiting yesterday, remember I tweeted. I said, hey, I'd rather see you short this and have the potential of averaging up, because I think you could trade out of that easier if it happens to go to 1840. versus buying it because who knows how much further it can go. It's still sort of broken. Well, anyway, if you shorted it when it got into the gap, congratulations, you made some money. This was the big level, 1730. If you bought it versus, you got out here. You had to. And now, we'll see what happens into here. But a lot of things are at the bottom ends of the range. So we'll see. Maybe S&P comes all the way down, this hangs here, and they want to try another Christmas rally in a week or so or a few days. Then we'll be buying Amazon. But we'll wait for market discovery. We'll use maybe a red dog reversal. What's that? 1665 is now the important pivot. And so is this area. But this is pretty engulfing, filled the gap. If you were long it for this active sequence and it took out this spot, this was your spot to get out of the way. Now wait to see what happens if it could hold higher. Netflix was a great intraday trade for me, and thank goodness I got away from it because it turned into maybe a good short for someone else. It broke this area. This is still below all the moving averages, not like Amazon, still broken. So who knows? Can it get back to here? I don't know, but all I know is, made a lower high, went red, got out of the way, and some of you guys might have got short when it broke this and made yourself a nice amount of money. What did I see early on in the day to try it long? Well, I dissected it. I saw that it didn't make a new low, showed a little relative strength. I saw, Tesla's strong. It went sideways. I bought it. I think I sold a little bit, held it, sold a little bit more, and then I got stopped out here when it broke that upper area. And thank goodness I didn't go back to it all day just because I was, too tied up in other stuff. Facebook did the same thing. Had a quick push and then failed. Facebook does that. It changes composure. This was your quick little push in the morning. Wow. Quick trade if you took it. I like trades like that. And then all of a sudden went sideways, broke here. That would have been my out. And then it broke here again and then all the way down. So anyway, and what did it do? It didn't get to the prior resistance if you were looking to short it. But anyway, that was a quick trade. Did the same thing with Tesla. Tesla I actually anticipated. It was down 2, bought some, and made some quick money here while I was dealing with my Apple, and I actually even sold it. Sometimes you just want to take a trade, even though there was more, and people are like, oh, you sold Tesla too early, Red Dog. I was like, okay, for me, it helped my day. I bought it down 2, traded above here, sold it up 2, made $4. That helped my morning dealing with my other stuff. I haven't traded Tesla in a while, so I'm like, that's good enough for me, And anyway, wound up giving you a little head and shoulders top pattern before coming back down. And then it actually looked pretty decent compared to other stuff. Anyway, I also had the OAHs, got stopped out because it was just a trade, closing the lows. Said it's got to hold, 1840 to stay in it. Well, it didn't hold 1840. What was 1840? That was yesterday's low. Broken sector. I'm not sticking around. I tried. Made a little yesterday, lost a little today. Now I move on. Oil also came down. Those of you guys are in GLD, what did it do? It's heading towards the 200-day. That still doesn't look easy, no real power. Gap up, didn't close well yesterday. Gap up, didn't close on highs, but whatever is what it is. If you're a metals fan, it's getting close to big resistance. And all that is that. Listen, there's all different types of sequences, and you do what's comfortable for you. If you started shorting last week on Wednesday into the Powell speech, and you thought, hey, we're going to be real weak next year, and you shorted on Wednesday, you shorted on Thursday, who knows, maybe you got capitulated out on Monday, and you covered, and now all of a sudden we're down, and you're like, oh my God, I was shorted last week, I couldn't stay solvent. Okay, you have to know what you can handle. You have to also know your timing and know your time frame. If you said, hey, I think next year we're still going to be in trouble, but maybe we rally if, Powell goes neutral or close to neutral, and we get maybe a deal, then, we could squeeze to 2,800. We need a lot more to get above there, and then maybe you caught that move, and then you were looking for a short today, or maybe you were looking for more, and then today the market said no when it broke through 27.73. So anyway, at this point, I'm sure some guys are short, because that's what the candle looks like. They had some power. Big move down today, so maybe it's over emotional because of people being on vacation tomorrow. Who knows, they're not vacation, the funeral. So for me, I'm just flat. I'm back to cash. I'm going to try and just take compelling trades. I'm going to try and piece together the money. I have no FOMO of missing out on a long right now, and I have no FOMO in being short back down to the lows. I'm just trying to stay safe, play some defense. If I get good setups, I'll go with them. If there are no good setups, I'll just try and be patient and try and keep you guys patient, as we don't have to be in everything. You don't have to be in 15, 20 stocks when the market's rallying. You don't have to be the same way, on the downside. You don't have to be short if you're a little uncomfortable. You don't have to be in 10 shorts. Maybe you can be 1 or 2, or you can be in cash and wait and pick your spots carefully. You got to do what's comfortable for you, but you also have to work on what's not comfortable for you. We all have those things. We know that. And tomorrow, I will post some charts. I'll probably write a little small note, but markets are closed, and you should, go do something to decompress and watch the funeral. And I'm not going to talk politics, but you don't have many guys out there that were in so many different wars, gave so much time to the country, and led I would say a very, very generous life for the public and for the people. So I will be watching a little bit of it tomorrow. Have a great night, and I'll see you Thursday. But I'm sure we'll interact at some points tomorrow. Bye-bye.